Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, October 22nd, 2021. And our top story today, the first Bitcoin ETF launches. Well, joining me now to discuss this and a lot more is Kevin Kelly of Delphi Digital. Kevin, great to see you. Thanks so much for joining us on the program this morning.
Yeah, thanks for having me back, Jeff. Good to see you.
And actually, it's Pet Appreciation Day because in the background, I can see Duke looking out at the park. So hello, Duke, as well. Maybe he'll weigh in on Bitcoin and crypto. So Kevin, I want to talk about this ETF that just launched on the 15th, or it was announced on the 15th, I guess, or approved on the 15th. But before we jump in there, where are we with cryptocurrency and specifically Bitcoin in terms of valuation? Price.
Yeah. So it's been a really interesting last couple of weeks. What you basically saw was earlier this year, Bitcoin ran up as it usually does. We saw pretty big what they consider consolidation. So price was kind of trending lower. You're starting to see a little bit of volatility pull out of the market. And then what we really saw was, to your point, this announcement around a Bitcoin linked ETF, which we'll get into in a minute. That announcement started to spark, revive some excitement, I guess you could say, around, Bitcoin, the rest of the crypto market. And you started to see Bitcoin really start to trend higher. And we actually put out a market note early last week, basically outlining the setup for this, because not only did you have this ETF announcement coming, but you also had a number of kind of technical indicators and momentum indicators that were really kind of pointing towards Bitcoin moving higher and potentially even breaking to a new all-time high, which we luckily saw this week. And so it's been a culmination of a handful of things. I also think institutions have come back into this market, in a pretty big way, especially when it comes to this ETF, which is one of the most successful ETF launches you've ever seen. After that summer lull, right, where usually institutional investors kind of take the summer off, or there's lower trading volume, you're now seeing them come back in full force into both traditional markets as well as crypto. So there's a lot of things going on that are really exciting heading into year end.
All right, so let's break down this new ETF, and I think it's very exciting. Gives investors exposure, and just to kind of level set, the SEC had always kind of pushed this off. I think our friends, the Winklevosses, I'm joking there, but they had actually laid the groundwork they wanted to get an ETF of Bitcoin or crypto back in 2013. So what took so long for our friends at the SEC, and what exactly is this ETF? Two-part question, I guess.
Yeah, it's been this just kind of long-standing running joke, right, with anybody in crypto that an ETF was going to eventually make its way to the U.S. And it seems like every 3 months, everyone says it's 3 months out. There's some important differences between this ETF versus what they would consider a spot ETF, which I'll get into. But basically, this ETF is linked to futures, right? So it's not actually trading the underlying or holding the underlying Bitcoin spot. And there's a number of reasons why that's an important difference to make. One of the big reasons why the SEC still has not approved a spot ETF for Bitcoin within the US is they still consider that the spot market, to be a bit more immature. It's not nearly as regulated as the futures market, which has been around for decades. And so I look at this as it's not the best type of product that we would hope for, but it is a stepping stone, right? It's at least a first step that gets regulators at least hopefully more comfortable with this. They've already seen, again, in the first just 2 days of trading, and the amount of AUM that the ProShares ETF's been able to accumulate, which is now over $1 billion. I think because there's so much pent up demand and they're seeing that in real time, I think it could accelerate the timeline for getting us a spot ETF, but there are some important differences, which I'm happy to get into.
And I want to talk about kind of investor risks or things to think about in the second segment, but let's break this down a little bit further. You said it's the second quickest ETF launch. They've got over $1 billion invested in this product. Clearly, there is investor demand there, and I'm wondering, any sense for where these flows are coming from? Is it all institutional money? Is it some retail flow? Is it sovereign wealth funds, endowments? Where is this money coming from, this $1 billion that just came in here as of Wednesday?
Yeah, it's still pretty early, so we're trying to suss out exactly where the flows are coming from. But in my conversations, yes, institutional players are certainly a big part of this. It also includes financial advisors, RIAs, right? Getting into this, and whether or not they understand the intricate differences between a futures linked product and a spot product, is kind of up to them. But you are seeing a lot of flows from the more kind of financial advisory world as well. And then you have the ability to trade in and out of this in like an RIA account, right? And so So actual like retail investing, having this get into retirement portfolios is another kind of source of flows, right? And this is going to bring, I think the silver lining here is this brings more not only attention but more liquidity to this market, right? It is futures based, it's trading CME futures, again, very regulated. But by nature of having more of these flows come in, I think you're going to see the underlying liquidity in spot also react to this as well. So far, what it looks like is institutions as well as the financial advisory world is really kind of driving this forward.
What's the reaction from firms that have been knee deep, like Delphi? Hi, Duke. He finally got away from the window. But what has been the reaction from experts like yourself, people in and around the ecosystem? Is it an embracing in a way of crypto? And I hate to rely on other people to justify my existence or the existence of Bitcoin. But look, you need some of the blessing of the regulators to do that. But what's been the general reaction to you and your peers, I should say?
I would say generally the reaction's been positive, right? There has been a bit of an embracing of this product. And again, us understanding the differences between this, a lot of people are looking at this as just another point of validation, right? Because I think what the Bitcoin and the crypto community has realized is that as we're trying to, really not only make our mark, but have this mainstream adoption of crypto, you need these types of events and these types of catalysts to bring more people in, right? Whether it's, again, the most ideal way to come in, that's up for debate, but largely the sentiment around the crypto sphere is this is bullish. You're seeing it in the price reaction. You're seeing breakouts to new all-time highs. There's now talk about potentially an Ether ETF, on the way, if that's linked to futures as well. So it's just creating a lot of excitement and hype around what's going on. And I would say largely the sentiment's been positive.
Yeah, I would think so. So Kevin, I want to take a quick break. When we come back, we're going to break down what are some of the nuanced differences between this ETF and traditional ETFs. And also we'll talk about maybe some of the associated risks before you jump in and invest. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning with Kevin Kelly of Delphi Digital and his dog, Duke. Gentlemen, thanks so much for staying with us this morning.
I was going to say, Duke's going to take over this segment.
Yeah, well, we are pet friendly. We love dogs, cats, gerbils, hamsters, you name it, snakes. They're all welcome on the program to voice their opinion. So, Kevin, you talked about, let's go into a little bit further about what are some of the nuanced differences. I want people, we're not going to give investment advice. That's not what we're doing here. But I want people to understand, including myself, because I'm ignorant, the key differences between a spot ETF and a futures ETF.
Yeah, the big primary difference is in the former, the spot ETF, you're actually, the vehicle itself is holding the underlying, right, to some degree. And what I mean by that is actually like holding physical Bitcoin. There are a number of complications when it comes to doing that, right? We talk about custody risk, which we've been talking about in this program for a long time now. Again, that market being somewhat less mature, at least in regulators' eyes, and not nearly as regulated. And so what the futures linked ETF does is basically the underlying that ETF holds or trades is the actual futures contracts rather than Bitcoin itself.
Okay, well that's important to know. And Kevin, there have been, look, we have, I think we've talked about this and others with others and yourself on this program. There have been, since the launch of the pandemic, or since this pandemic has happened, so many new investors logging on to platforms like Robinhood and Betterment, et cetera. And I think that's a great thing. But you really need to be aware about what you're investing in, because if not, you can get hurt if you don't understand the difference between investing in the core asset of Bitcoin versus these futures.
Yeah, and there's two parts to this, I think. One, if Bitcoin really does outperform traditional asset classes pretty drastically, by being exposed or having exposure to a Bitcoin futures linked ETF, you're still going to outperform, right? That's the general idea. So it is a way to get exposure. Where the real risks come in is there are almost hidden fees or costs associated with a futures product that a spot product doesn't necessarily suffer from. So because of the way in which the Bitcoin, the ProShares futures ETF is going to be linked is they're basically going to hold what they call current month futures contracts. So where this gets important is as markets tend to trend higher, right? As if Bitcoin's kind of on this upward trajectory, it usually trades in what's called contango in the futures market, which means that the futures price, right, for contracts that are months out are going to trade at a higher value than what spot does. And so where this gets important is as you get to the end of the month and you're rolling forward these contracts, you're going from, let's say, October, right? We're talking here towards late October. You're going from the October contract to the November contract, because let's say that November contract is trading at, call it 70,000, right? And Bitcoin's trading at, or Bitcoin current month is trading at 65. The ETF has to basically sell this amount of Bitcoin at 65 and buy this amount of futures at 70, right? So there is that implicit cost of, it's what they call rolling costs as you go out. And where a lot of the controversy is coming in is because Bitcoin is such a volatile asset class, volatile asset, crypto being a volatile asset class, there is the chance that as that divergence becomes bigger, potentially, you have these higher roll costs that maybe on a month-to-month basis don't seem like a lot, but when you annualize those costs, it can get pretty expensive for investors. And so not to say, again, that you wouldn't have upside exposure and you wouldn't be doing well, you wouldn't be in positive territory, but there are some implicit costs that I don't think everybody understands.
And this, Kevin, listening to you describe this, I'm reminded of the movie Trading Places, if you recall, if you've seen that movie with Eddie Murphy and Dan Aykroyd. It was a hilarious, and other great actors and actresses. They're trading futures contracts on commodities like, I think it was oranges, if I'm not mistaken. Mm-hmm. So this is very similar to, we have commodities, oil, gas, others that trade the same way.
Yep. And these are trading, again, the CME Bitcoin futures, right, is, predominant kind of institutional futures market that you're seeing people flow into, right? And so, again, when you think about what's being traded and how it's being traded, CME, right, is a real true brand name in the derivative space, especially in the futures market. And that's the type of contracts that this product is going to be trading, right? So it's also very familiar for, more institutional and sophisticated investors who have been playing in these spaces like commodities for years now. So again, there is, a silver lining to getting this ETF off the ground and approved.
Kevin, in terms of resources, being able to educate yourself about this product and similar products, you mentioned a potential Ether ETF, futures ETF. Can we go to the Delphi Digital website to learn more? I think you mentioned you did a market note recently, but if I'm a financial advisor or an individual, can I pick up information about exactly what this is just so that I'm outside of the ProShares website?
Yeah, absolutely. No, we've got a ton of resources right on our website. We actually put out a free, what we call the Delphi Daily, which is just a free newsletter. Yesterday's version actually covered, in depth what our reaction was and what we thought the implications would be for this ProShares ETF going live. So you can find a lot of information right there on our site. And then again, just tracking general news. This is a bit more of an institutional product, so you can get some information through things like Bloomberg or even the Wall Street Journal. But it is something that, we're certainly monitoring very, very closely, and we'll continue to do, for this foreseeable future.
30 seconds left, Kevin. What do we look for? 1.1 billion in assets under management today. What are you looking for a week from now?
Yeah, it's tough to say. I think we'll see how today shakes out, really the rest of the week. If we end the week above 1.5 billion, I mean, you could see 2 sometime next week. That wouldn't be out of the question. To put it quickly in comparison, Grayscale has the biggest Bitcoin investment vehicle or product out there on the market today, and that's 35-40 billion, I believe, last time I checked. And so this is a significant move, though. It becomes one of the biggest kind of investment vehicles that is linked to Bitcoin right out of the gate, right in its first couple of days of trading. So again, we'll see more products come down the line, but in general, I think this is definitely a trend that's here to stay.
Yeah, I think it's going to be really interesting to watch, and we're going to have to check back with you again, maybe in a couple of weeks to see how things are trending. And I got to tell you, watching Duke, I think either he's ready to go out for a walk or he's really excited about Bitcoin futures. Kevin Kelly, always a pleasure chatting with you. Thanks so much for joining us, and we look forward to having you back on again very soon.
I think it's a little bit of both. Thanks for having me on, Jeff. Appreciate it.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, this time for BRN Weekly. We'll have a very special guest, and then we'll take a look at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.